This is a stock analysis for Cornish Metals. Before I start this video, please remember I do these videos just for fun as a hobby and always speak to a qualified financial advisor before making any investment decision. Cornish Metals are a AIM-listed exploration company and they're focused mainly on the South Crofty project in Cornwall. They listed on AIM in 2021 raising 8.2 million and then have more recently raised 40.5 million to develop the South Crofty project. South Crofty was a working mine from 1855 all the way to 1996, and it only stopped mining when the tin price collapsed in 1996. It changed hands many times, but because local government agencies wanted to effectively stop mining, instead turn the area into yuppie flats and a leisure centre, the companies that owned these works who wanted to develop it all ended up going bankrupt. But eventually, the government agency actions, which were opposed by the local people, were defeated in court. A company called Strongbow Exploration bought the site from administration, and these guys have since changed their name to Cornish Metals and listed on AIM. So we already have all the mine infrastructure, and Cornish Metals are currently draining the existing mine works, which are flooded, with a goal of mining it from 2026. The mine has average tin grades of 1.5%, which is actually a exceptionally good world-class resource. The majority of the world's mines are only something like 0.5%. Plus, they have indicated reserves of 44,000 tons of tin, plus inferred reserves of 37,000 tons. So this is the South Crofty site, and they've also done some exploration drilling at this adjacent site here, and also this site here, which isn't that far away, United Downs. They also own exploration rights throughout all these areas around Cornwall. So if this mine was successful, we have a means here for then further growth of the company by replicating their success here at other locations. They also have some legacy exploration rights in North America, but to be honest, I'm not too sure about how successful those will be. This is the long-term share price of Strongbow Exploration, which was listed on the Canadian Stock Exchange. And as you can see, it fitted the profile of a typical hustling exploration stock, complete destruction of the share price, and you get these pumps as they may have made discoveries here and then. But it's a typical story, really, of struggling to find decent exploration targets and somehow being able to raise cash just to survive, really, as a kind of zombie stock, until they bought South Crofty in 2016, and now they've managed to revitalize the company. They have a very interesting deal with Cornish Lithium as well, which I'll go into later, but this gives you some exposure to this much vaunted lithium and EV battery kind of deal. So the market cap is currently very small, only 33 million, and the net present value of this project when it was worked out in 2017 was apparently, I work out, 177 million Canadian dollars. And I also looked at the value of the estimated tin that they have and looked at what is 10% of that at the current price. And that came to this value here, which is also a kind of very rough ballpark figure I did just to give myself some kind of measure of this estimate. So we are looking, if they are successful, at potentially like a good clean 5x here. And that's the kind of risk reward that you typically get with these high risk stocks that I look at. Now, I actually worked out from looking at a very old Strongbow presentation that the bottom price for tin for this project to work is about 10,000. That's the breaking even price, and I think they'd really need tin to be at a higher price than that to be really safe. I'm saying 20,000, but maybe 15. But really, if you want to be conservative like me, $20,000 tin. The actual appraisal where I got that MPV value from was $22,000 tin, and we're actually at about that now. So the tin price, there is definitely this long-term strengthening, but I'm a little concerned by the current trend. And one thing that's certain with this stock is you want the price, in my opinion, to be above 20,000 in order to be really confident going in. So let's look at their Cornish assets. And South Crofty had this initial study with a MPV estimate of 177 million. They, in 2021 and 2023, have done some studies and where they've managed to actually increase the resource currently to about 44,000 tons tin and 37,000 tons. That's indicated and inferred resources. With this very impressive tin assay of 1.5% and 1.4% respectively. So the current status is that they are dewatering the South Crofty site using this water treatment plant that they had to build with the 40.55 million that they raised in May of this year. They've just started pumping that and they're targeting, and I worked out based on previous promises that maybe that should be finished by April of next year. And then their aim is to do a feasibility study by the end of next year and then hopefully get funding, which I've calculated should be something like 120 million, and a final investment decision by the end of next year. Then they can build a processing plant where they could perhaps be commencing mining from the end of 2026, so more likely in 2027. So they have this project that, the decline of the mine is actually there. They're just dewatering it, and really they've got to just build a processing plant and start the mining if they manage to raise the money. So as high risk plays go, there's a lot already laid on here, which I think makes this project quite attractive. Also, I was kind of worried that, well, it's an existing mine. Are they just scraping the barrel kind of thing? But, there are some decent indicated and inferred resources here. If future work gets converted into actual resources, you've got to be very careful with the terminology here because these inferred and indicated resources, that's a different thing from mineral reserves that can be claimed once there's more data and more work done. Now, when you're at this stage of exploration, that's the risk you're always going to have to take before going in. How economically viable really are these reserves? But we do have in our favour the fact that it was a working mine with a lot of with a lot of the decline down to the mining level already done. And I managed to get off Wikipedia the previous tonnage of production at this mine. And what I found was that when it closed, it was at record amounts of production. So this for me gives me some confidence that I really can believe some of these numbers by virtue of the fact that, it was at full pelt when they had to close it because of the collapse of the tin price. If this was a mine where they really were at the scraping the barrel phase, I would kind of expect the amount of production to be in a downwards trend, before they actually closed it. But that's not what we see here. Now, in terms of the United Downs project, I've got here the latest drills they did to gain confidence in the resources at the main South Crofty. And remember that, 1.5% is a very, very good number. And, so we get some comparative data here because you've also got to think, you might have got, a very high assay in one spot, but that could just be you were lucky. There were just one massive nugget of tin in that particular area, you've got to consider the thickness as well, and that in the overall resource, you've got to then think of the average over the overall resource. And so when I looked at the United Downs, the tin results really weren't so impressive overall. Now, this area, though, it did actually have lots of copper, zinc, and gold, and I haven't dug into really how good those amounts were, but my kind of general impression was that I'm not too excited about this United Downs project. The Carnbria South area, though, they did some initial drill results where they got some decent assays. There was already this great flat lode formation, which is what they were targeting, but they did one extra long drill and did a discovery and achieved a discovery at this so-called wide formation. Here are those 8 drills that you see here, and with one of them, number 2, they made a discovery at what they called the wide formation, where they actually got about 1% tin, which is a good grade, at a decent thickness. So their initial drill campaign, it does, it's no way, it's definitely not as good as South Crofty, but it's actually a reasonable resource, I think. And we've got this excitement that with a second campaign that they're currently doing, it's possible that they managed to expand the prospective resource in this wide formation, which does appear like it could be a impressive grade. So this Carnbria South is very interesting, especially because it can be accessed from the current mine. So once they've done, so the idea is that they do the mining here at South Crofty and then use the existing works to access this resource without having to do a decline. And then it would be mine extension that they can do at very good cost efficiency because they'll be able to use the same mine infrastructure and the same processing plant that they have at South Crofty. This for me really is a bonus to this project, and I find a very, very credible money multiplier for this company actually. Yeah, so generally I am actually fairly impressed with the assets that they have at South Crofty with this possible extension as well. Now they also own all these mineral rights throughout Cornwall, and it has to be said it's very impressive that Strongbow were able to get from administration, because the company that originally owned all this was bankrupt. So at kind of a really for a song, Strongbow, who are now Cornish Metals, as well as acquiring this, have acquired all these mineral rights. And so this for me is another reason for investing into Cornish Metals, because not only have you got the initial risk reward profile for South Crofty, but if that is successful, then for not much money, they can then start exploring all these other areas to then provide future growth for the company. And they've got a very good deal with Cornish Lithium. So Cornish Lithium are a private company who are actually hoping to list and go public soon. But they plan to build geothermal projects where they extract lithium. And then obviously that lithium is going to be used for all this hype surrounding EVs and lithium batteries and EVs. I actually looked at some of their annual reports, and it kind of came across as a bit of a basket case. To be fair, I didn't spend that long, but overall the numbers looked fairly scary. But there's a lot of hype and a lot of interest in lithium, and they have been very successful in generating money from people who want to invest in this, including actually a lot of government money. So Cornish Lithium have done a deal with Cornish Metals, where Cornish Lithium get to do exploration projects for geothermal stroke lithium at all of Cornish Metals mineral rights that you see on the map here. And then in return for that, if any of these are successful, with perhaps the help of lots of government money and stuff and free taxpayer money, Cornish Metals will get 25% of interest in the first project developed, plus 10% on all subsequent projects, plus they'll get a 2% royalty on all projects developed within its rights. And then on top of that, Cornish Lithium have to give Cornish Metals currently $100,000 a year worth of shares, and that's going to increase from 2027 to $500,000 worth per year. So this for me is, a great little added bonus for owning Cornish Metals. Which I wouldn't bank. I definitely wouldn't invest in them just for this, but it's a nice little kind of bolt-on little bit of spice if you own Cornish Metals to follow the news flow that comes from that in the future as well. So back to the long-term price history for Strongbow exploration. Like I explained before, your typical kind of feisty exploration company raising money at times or achieving little drill results which pumped up the price, but really essentially what appears to be some kind of zombie company eventually. And as often happens with exploration companies, really, I do think that this purchase out of administration of the mineral rights in Cornwall and the Crofty project really was kind of a stroke of genius. And they managed to emerge from this almost dead company profile to their listing on AIM after buying the Crofty site, plus all of those other exploration resources throughout Cornwall, off the administrators for 3.9 million. Now, one important thing is in the original terms of that purchase, there was actually this really onerous clause where they had to pay the liquidators 25% of the net present value on production decision. So that for me is extremely onerous. So this news item in late 2021, which I think was maybe overlooked by a lot of people, is crucial because they managed to arrange a side letter changing the terms to much better terms where rather than having to pay 25% of NPV, they only had to pay 5 million worth of stock. Plus, bear in mind they've already paid lots of stock previous to this, in order to gain those assets. So this was an important moment actually in making, I think, the project more feasible, because I wonder with those onerous terms, would they have achieved the final investment decision? But now they've got much more reasonable terms. I think that makes it more likely, and it's interesting how we get a good increase in the share price. But also the tin price was up to double what it is now in this period, so that maybe also contributed. And I think of that was a lot of the hype surrounding EVs and stuff, and tin has some links to renewable energy as well. And so yeah, we got this pump and then the typical dump of a exploration company. And the interesting thing is actually from this period, it's only been good news, and it must be quite frustrating for anyone who bought up here, seeing constant good news, but the share price going down because essentially this was like a speculative pump. Now, the first and actually biggest of all this good news was their 40.5 million capital raise, which they achieved halfway through 2022. That was mostly from one shareholder, Vision Blue Resources, who now have a 30% stake in the company. They had the United Downs drill results, and then the new discovery of this good assay results at the Wired Formation. They then this year have come out with good data from South Crofty, where they've further confirmed these indicated and inferred, and those results were enabled them to increase the predicted resources. Presumably would be better than this original MPV, and I believe the resources are up by about 30%. Bear in mind, there's still not enough data to be able to call them reserves though yet, but still. And I've summarized that data here. So they now just began a 9,000 kilometer drill campaign at Cambria to test this wide formation. And I think that early-ish, maybe next year or first half of next year, I'd expect we might start getting some positive news flow from that, or bad or negative, but let's hope positive. So that's kind of something to watch out for. And then finally, they'd raised the 40 odd million in 2022. Finally, end of October, they've started to pump to dewater this mine now that they've built the water treatment plant. So, of course, the next milestone for this company is dewatering the mine, and then hopefully, they say end of 2024, arrive at the final investment decision. And of course, you've got to bear in mind they have to do a capital raise as well to achieve this. So before I go on to look at the numbers, it didn't seem worth doing a statement of cash flows analysis because they aren't even making any money, and they've just basically got a big pile of cash that they're spending on doing the dewatering and setting up some stuff for final investment decision. But here it is if you're interested. I looked into the key management compensation, and they are spending over $1 million a year in Canadian dollars on compensation for all the top management. So, as per usual for an exploration company, there's lots of pigs at the trough. And when we look at the stock option situation as well, lots of pigs at the trough. And this is going to cause some stock dilution. I've summarized the options and outstanding warrants. Now, so staying on that theme, and currently the giveaways to the top management here account to about 2% of the current stock float. At 18p, which is, to be fair, higher than the current amount. So how I feel about it, I think they're pocketing a bit too much given the stage of this project, but it's not too egregious at the moment, I don't think. I'm not kind of happy about it, frankly, but it's not that excessive that I'm going to not invest in them. But it's worth kind of keeping an eye on and factoring into your investment decision. On the actual stock options and warrants, the most significant thing is that when Blue Vision Resources paid them 40 million in that capital raise, it's great that that capital raise was at 18p because that's much higher. It meant that they got a lot of money for their stock dilution compared with where the share price now is if you're going to invest in them now. The negative, though, is that as well as those stock options, as well as selling them those shares in the capital raise, they also got warrants. And these warrants would account for a 42% stock dilution by my account, by my calculations, which I hope I got right. And these last till 2025. Now it's at a share price of 27p. So it only kicks in really if they've been successful with their capital raise to and final investment decision. So that's good. But bear in mind that when we start getting north of 30p, there could be some stock dilution coming in. Now, they will raise another 61 million if that happens, but, do bear in mind that that does kind of dampen the further uppage in share price if that happened. And, because of that, really, you'd perhaps maybe even look at 40p plus as a target even. Just one also slide from their presentation. This shows you how they're dewatering the mine in these 3 different stages. Okay, so looking at the numbers, and obviously exploration company that still hasn't developed a mine, there isn't really any real income. There is, though, some income which is worth going into because we do learn quite a bit about the company from this. So the first is the unrealized gains and realized gains on marketable securities. Now these are actually shares that they own in other companies. First, we see this 2 million in 2019. Oh, one thing, because their full year is in end of January, and that means that when you see 2018 here, that means the year up to January 2018. So really, it means 2017. So actually, the 2024 will actually be the new 2023 when they go and sort that out. But just bear in mind that because of the January reporting, these numbers actually represent the previous year than the financial year. But anyway, in 2018, they sold all these shares in West Haven Gold. And look, 2018. So what happened was West Haven Gold made a gold discovery, and then Cornish Metals, who were then Strongbow, sold them at the top price. So that's quite good. And here you see, obviously the fact they sold them then, it just goes to show you how being a explorer themselves, they know what investing in exploration companies is all about when you see the price action here. So that is interesting. Obviously, throughout their past, when they were doing all their wheeling and dealing, they picked up shares in different companies along the way. And more recently, they've been gaining shares in Cornish Lithium as part of their deal with Cornish Lithium. And as you can see, the shares in Cornish Lithium went up in 2022 because they got a big fundraising. Yeah, so the shares that they own, it's in their current assets here, currently worth about 3 million. So it's not really all that important in the large scale. It's an interesting kind of added little bonus to this company that's worth knowing about, particularly with Cornish Lithium. If we get this EV panacea that some people think, I mean, I don't really think we will, but you do at least have some exposure to that, which adds a bit of fun. Now, there's also this gain on disposal of royalty, which happened in 2022, which is actually important because that's linked, and we have to go into the liabilities now. There's a company, Osisco, and actually they'd been a big kind of benefactor of Strongbow Minerals back in the day. So when they were effectively a zombie company, it was a Cisco who helped keep them alive. They kept them alive, for example, with an interest-free 1.5 million loan. And then in 2017, when this company really was on its knees, but then also maybe to help them get the money, I'm sure, to be able to buy this crafty assets, they bought a load of royalty options off Strongbow. So these are convertible securities where Cisco gave Strongbow some basically lifeblood to keep living. In exchange, though, they get these royalty options. And then what's happened is now that in 2022 they've listed on AIM and raised some money to dewater the mine, so it looks like it might happen now. They've converted those royalty options, and so you see it leave the liabilities here and become a NSR liability. So these are where the money that they borrowed, they don't have to pay them back anymore, and that was money they needed to survive at the time. But instead, they've now got to pay a Cisco 1.5% royalties for everything they earn at South Crofty, plus 0.5% royalties for everything else in Cornwall. So that is actually, for only, I don't know, 10 million or whatever, that's actually quite a good outcome for a Cisco if South Crofty is a success. And of course, they achieved that incredible outcome because the because they were able to provide support here at a time when, judging from the assets here, Strongbow were on their knees. But that's important to be aware of that. Again, factor that in, that they are going to have to pay royalties here. I'd say overall, that's the also you could look at it, that's the reward for Cisco for actually providing the money that allowed Strongbow to buy these Cornish assets in the first place. But still, remember, make sure you factor that in. But then returning to the income, and so really beyond the gain on disposal of royalty, and when they do share sales or the value of their shares go up, really the majority of the income action is is currency exchange translations, which is just like a random noise fuzz, really. In terms of expenditure, and we have, running the office, promotion, obviously depreciation, and really consultants fees, which I make out as being payments to their own directors actually, and salaries is down here at 700,000 a year. The exploration and regulatory costs are actually fairly low, and then there's share-based compensation. So again, I was talking about lots of pigs at the trough, and overall though, their expenditure is fairly reasonable. At least it's staying kind of consistent, and they seem to have a cash burn of a good couple of million a year. It's disguised a bit by these FX translations and occasional luck in the stock markets, but yeah, we can say that they've got like I'd guesstimate to be safe, like a 2 million a year cash burn would be what I'd be using in my calculations, which isn't that bad considering that they were able to raise money at the optimum time, and so they have a fairly comfortable 40 million now. So in terms of their assets, it's mostly their exploration and evaluation assets, and then they have property, plant, and equipment. Obviously, things like the water treatment plant, and they have a lot of cash. So when I map out their assets here, it's actually a really healthy setup with their exploration evaluation assets, PPE, and then a third of it cash. So looks good. And compared with their market cap, that gives them a healthy price to book of zero point 0.3. Now remember, if South Crofty is a failure, they're spending this money on developing the water treatment plants and stuff, and they're going to need more money to then build the processing plant. So if they never get to that stage, if they never get the final investment decision, they would have spent this money, and then it's questionable what the PPE and what the exploration and evaluation assets are then worth. If it's a failure, do they kind of poof into thin air? If it is successful, I'd say it's a reasonable quality composition, and the market cap is looking very cheap compared with that, at only zero point 0.3 at the moment, price to book. And then here I've got the net present value of the assets of the Crofty project, according to the 2017 assessment anyway. And if you believe that assessment, as you can see, it outweighs the market cap tremendously. So here we get our kind of 5x really, in terms of comparing the market cap to the net present value if the project gets to final investment decision stage. In terms of liabilities, they really are minimal. Really, the only one being this NSR liability. They have no debt, which is great. And so you can see in my profile here that the debt really doesn't play much of a part. If you look at the shares in issue, then obviously to get where they are now, they've had to issue a lot of shares down the line. And in particular with the AIM listing and then that capital raise, there has been a lot of share dilution. But when I look at the market cap profile to take account of that, we see that the situation isn't bad when we compare the market cap to the net assets now compared with historically. In fact, it looks better now than it was historically. And, we're probably, we're probably past the exuberant stage, and, it doesn't look like a bad point here with, with the cash dwarfing the market cap even. So looking at the shareholder composition, and of course, Blue Vision Resources, they're the ones that came in with that big, most recent fundraising. And we have Cisco, which were there really before the South Crofty project, putting the money in that really, I think, enabled that to happen. But these are the guys that get these royalties. And then a plethora of other people here. And actually, in the last couple of years, not really people selling. Okay, so a quick look at the tin commodity, and reassuringly, half of the consumption is in soldering, and 16% in fairly safe chemicals, with actually only 7% in lead batteries. So there's all, but there is a course. Oh, by the way, this is 2020 data. It's the best I could get from Wood Mackenzie. And then I also used the International Tin Association as well for this data. It's good that actually, I think soldering and chemicals and EV and batteries and EVs, I think I'm quite happy investing in that. According to the International Tin Association, half the resource in the world is from Russia and China, but the actual reserves that are reported has been kind of dwindling. But they're fairly certain that the current reserves will last 18 years and resources last 50 years. So from reading their 2020 report, their general feel was that prices should be stable really in the coming years, because there's actually plenty of resources out there, but the price kind of has to be where it is now to encourage the production needed. And they said there's a small chance that there might be an absolute mega resource discovered somewhere, which could then dip the price quite a bit. But my overall feeling from reading the Tin Association report was that, current prices are kind of probably okay. And if you look, you've got a list here of all the 15 top projects in the world, and you can clearly see that the 1.5% grades at South Crofty are amongst the best in the world, frankly. So yeah, this is good confirmation that the grades they have at South Crofty are excellent. So that completes my video for Cornish Metals. As a high risk exploration play, they really do tick a lot of boxes for me. The net present value numbers, if they achieve final investment decision, is a reasonable multiple of the current market cap. They have a already existing set of mine works that they've just got to drain and then build a processing plant for. So that's kind of fairly unique amongst exploration plays. They seem to be generating good data in the South Crofty mine, and when I look at the what was being mined there on the day that it last shut down, it was going at full pelt there, which kind of gives me some confidence as well. You've also got the added bonus that they've made apparent discoveries in the Carnbrea project, which they'll be able to mine as an extension from the existing mines rather than having to set up a whole new mine, and it will be able to use the same processing plant. So this for me is a very common sense and quite compelling mine extension story, which just kind of add value to this prospect. And most importantly, in Cornwall, they have all the permitting they need and complete local government support and support the local population to execute this project. So for me, really, I'm very positive actually about Cornish Metals. The only thing that's holding me at bay at the moment is the tin price. Actually, in a short-term time frame, it has actually jumped back up lately. But really, I want to see it trending up in the long term, and that will just give me the confidence, because I just want to be sure that it's trending above 20,000. But I do definitely want to invest in Cornish Metals once I get that confirmation. But remember that if you own them, they look in danger as you start drifting below 20,000, in my opinion. But the good thing is that if you were to invest in them, and I kind of hope to in the next 1 to 6 months, you're going to know whether you're going to get your money back or not within a short time frame. The 0 hour for this company is at the end of next year. So I hope you found this video useful, and speak to you at the next video. I do videos like this one just for fun as a hobby. It's for entertainment purposes only. You'd be really stupid to make any kind of investment decision based on this video. Always consult a qualified financial advisor before making any investment decision. Prices can go down as well as up.